Bismillahirrahmanirrahim. Assalamu alaikum dear viewers. Today's our topic is understanding financial statements. My name is Muhammad Ammar, lecturer IBS Hungary campus, Kohart University of Sciences and Technology. Today our lecture number 13. So today our topic discussion agenda is financial statement analysis, primary types of financial statements, and the framework for financial analysis. First of all, I would like to brief you about financial statement. As we know that in accounting or business finance, the financial statements are our balance sheet, our income statement, and the cash flow statement. So basically in this lecture we will discuss about the financial statement analysis. So how we interpret our financial statements, or what are the benefits of these financial statements to our stakeholders, or you can say our stockholders. And then primary types of financial statements, and at last we can check the framework for this financial analysis. So example of external uses of this statement analysis. Who are our external users? First one is trade creditors. So they basically focus on the liquidity of the firm. As we know, a firm, how much liquid a firm is, basically we can focus on is their balance sheet in current assets to check how basically this firm is liquid. Bondholders actually focus on the long-term cash flow of the firm, and the shareholders focus on the profitability and the long-term health of the firm. So you are seeing that different external users have different views to check the financial statements to get the knowledge about the firm or the business, whether they could invest in that stock or not. Basically they can check from their own point of view. Like we see that trade creditors basically focus on the liquidity of the firm, and on other hand the bondholders basically focus on the long-term cash flow, and the shareholders basically focus on the profitability and the long-term health of the firm. Examples of internal uses of the statement analysis: they have basically a plan that focus on assessing the current financial position and evaluating the potential firm opportunities if they have any opportunities. The control focus on return on investment if they have invested in any different type of stocks, so they basically focus on that return for various assets and asset efficiency as well. To understand, focus on understanding how suppliers of the fund analyze the firm. So these three are basically for the internal uses of the statement analysis. Primary types of financial statements. Yes, we know that is the balance sheet, and what the balance sheet contains a summary of a firm's financial position on a given date that shows the total asset is equal to total liabilities plus owner equity, and we know that basically this is also known as the accounting equation. So in balance sheet we have two side, one contains the assets, and on other hand side we see that contains the liabilities and owner equity, right? And income statement, a summary of a firm's revenue and expenses over a specified period, ending with a net income or loss for the period. Or we can say profit and loss statement, in which we can see the firm is getting profit, the firm is getting profit or firm being in loss. So income statement shows us a firm profit and loss. So you see, they have put an example of the basket wonders balance sheet, and this is basically the asset side of this balance sheet of the basket wonders. So on December 31st, 2007, right? These all terms are being in $1,000, right? So we see cash and cash equivalent, account receivable, inventory, prepaid expenses, accumulated tax prepay. So current asset being totaled at $1195. Then they have taken the fixed asset, the cost is 1030, and less accumulated depreciation, and the net fixed asset being $701. And the investment long term is $50. Other assets of long term are 223, and the total asset that being given is $2169. So they have defined all the mm, terms. You can see a for this, that how the firm stands on a specific date, that is December 31st, 2007. B stands for what basket wonders on, and B means the overall total asset. C basically tell us about amounts owned by the customer, and you know that this account receivable that owned by the customers. D, future expense items already paid, that the prepaid expenses you seen that is $5. E, cash likely convertible to cash within 1 year, below than 1 year. So you can see this also in the current asset, which is 1195. So we know that current asset below than 1 year. So F, original amount paid, and G is accumulated deduction for wear and tear. So they have taken this example, and then we try the financial ratios on this example to find out our basic need. That is, we know that we are discussing about financial statements. So how our stockholders need the information regarding their investment in any business or company. So this is the asset side of basket wonders balance sheet. Now we can check the other side of this balance sheet. So you see the basket wonders balance sheet, and this is your liability side. And on liability side, they have given the note payable, account payable, accrued taxes, other accrued liabilities. So current liability is $500, and long-term debt is 530. And then at last the shareholder equity, the common stock one par value is 200, at parent capital is 729, and the retained earning 210. The total equity being $1139, and the total liability and equity being $2169. So overall this is your liability side, and the explanations they have given. Now we have to see, these are the explanations A stands for not asset is equal to liability plus equity, which is given there. So B, what basket wonders own and ownership to position. So this is also there. They have given C denote for own to suppliers for goods and services. D for unpaid wages, salaries, etc. E debts payable less than 1 year. F debt payable greater than 1 year. And G original investment. So this is your whole balance sheet of the basket wonder of the year 2007, right? So we can try to solve our ratios by seeing this example of basket wonder in our next lecture. And now we can see they have also given the income statement of the basket wonders, and we know that income statement shows the company's net profit or loss for the same year, and that is 2007, December 2007. They have given the net sales, cost of goods sold, gross profit, expenses. EBIT stand for earning before interest and tax, interest expense. EBT, earning before tax, income taxes, then EAT, earning after tax, cash dividend, increase in RE. So this shows the income statement of basket wonder. Now you can see the explanation of all these. A stand for my profitability over time period. B, received, the cost of goods sold received or receivable from customers. C, the expenses, sales, permanent offices, salaries, etc. And D, operating income, cost of borrowed funds, taxable income. So these all are the explanation of this income statement of basket wonder. Framework for financial analysis. First point is analysis of the funds need of the firm. So how much funding will be required in the future? Is there a seasonal component? Analytical tools use sources and uses the statement of cash flows or cash budgets. In point 2, analysis of the financial condition and profitability of the firm. Or we can say health of the firm. It shows the health of the firm. So individually, like we could focus on this from individually or over the time, like we can relate it to the past years and then the current year in combination. If we check this health of the firm in combination of an other one, or in comparison, we can also compare it to the other firm also. And the third point, analysis of the business risk of the firm. So business risk relates to the risk inherent in the operation of the firm. This example include volatility in sales, if they have any volatilities in sales regarding that any changes of the sales, volatility in cost and proximity to break-even point. Now after these, then we have to determining the financial needs of the firm. Actually, a financial manager must consider all these three jointly when determining the financing needs of the firm, right? A financial manager can focus all these three combinedly, right? At last, negotiations with the suppliers of the capital. So these are the basics of understanding the financial statement analysis. We have starting the new topic in this lecture about financial statement analysis, and We know about that who want to use these analysis, internal users and external users, trade creditors, bond holders, or on the other hand side is basically internal users as well, to get the best knowledge about their financial statements. And we also discussed that the financial statement, the balance sheet, income statement, and cash flow statement. Through this we can find the financial ratios in our next lecture. And they have also given the example of the balance sheet and income statement of the basket wonders, through which we can find the financial ratios to analyze our financial statements. So these are the related links. You can visit, watch the video, you can visit the related link of the YouTube, and also the related links to get more knowledge about this current topic. Thank you from my side, and stay blessed.